Lots to share with you in the business report today about the varied forms resilience may take, as demonstrated by the Pan Jamaica Group, whose strength to push through challenging times locally and globally was fortified through diversification. Jeffrey Hull, CEO and Vice Chairman, spoke to the effect of foresight and how it's propelled the PJG to consolidated net profits of $8.1 billion for the year ended December 31, 2025, a 33% increase over 2024.
2025 was a year that tested corporate Jamaica. The big challenge that everyone's talking about when they look at the earnings line is Melissa. But in the background, you had massive disruptions to the trading regime, you had geopolitics, you had balance sheet tests with companies facing debt and liquidity issues and interest rates on that component of their liabilities. I would say that Pan Jamaica went into the year with a strong business model, and we designed the business model to deal with shocks like this. It's diversified by business line, it's diversified by geography. We have strong market positioning in the key segments in which we do business, and we have serious experience, leadership at the management team in the organizations in which we do business.
3 of its 4 operating divisions experienced double-digit revenue growth.
We came out with growing revenues. Revenues are up about 14%. That went straight through to the bottom line, with shareholder profits up 38%. We're able to pass that on to shareholders with a 38% increase in our dividend payout as well. But we still retained an outstanding balance sheet. So our cash, our investment securities, our marketable securities are now on the order of $150 million USD. Our asset line is approaching $1 billion US with net assets about $500 million.
The strong balance sheet and growing revenue has reinforced the confidence that the group has placed in its business model and the strategic decision to diversify.
Diversification was central to what we do. So in our 4 business lines, we powered forward with a 75% uplift in shareholder profits in financial services. Our investment in Sagicor, where we have a 30% interest, performed very well. It had strong market power. It delivered in its core business lines. Its management team is firmly in place and getting results.
Driven by increased volumes on its Geest Line shipping service and stronger domestic and transshipment activity at Kingston Wharves, the Global Services Division, which includes port operations and logistics, delivered notable contributions to group performance, with a 25% increase in profit relative to 2024.
Kingston Wharves performed for Jamaica in Melissa, and we're really proud of their work. Obviously, it's very challenging, but they're doing what they have to do. Our Geest business in the shipping line, the freight forwarding operations also performed exceptionally well. So those were 2 big engines.
The Pan Jamaica Group's Property and Infrastructure Division, which includes the Rock Hotel Kingston, saw revenues climb 12% to $4.8 billion, supported by higher occupancies and rate adjustments across its commercial property portfolio and various hospitality assets.
Our property business had a steady year. In the prior year, in 2024, we took a one-off gain on the sale of a non-core asset. And so that didn't repeat in 2025, but the earnings held steady. And it held steady because our occupancies are good, have high quality tenants, corporate headquarters for financial institutions, for the audit firms, for key food service enterprises, for key corporates. And we're really proud of that, and we're proud that it's delivering for shareholders.
Understandably, the group did suffer reversals in the Specialty Foods Division, PJG's largest revenue contributor, which was impacted by the passage of what is now known to be one of the most powerful hurricanes on record, despite reported revenues of $25.2 billion, up 10% year over year.
So that took a big hit in our banana farms. It took a $300 million hit in Q4 as a result of Melissa. But the team went straight back to work. We replanted. We're going to be back in full production in bananas in June, and we're already back in pineapples in the market. So we're really proud of being able to overcome that very significant setback.
Currently positioned as a market leader in fresh juice production across Northern Europe, the group's European expansion has gone some way to diluting the local impacts of the weather event on the overall performance of the division.
Our juice business in Europe performed very well. That's becoming a very solid platform for the group. It's doing what it's supposed to do. We now have 4 production sites, one in Spain, one in Belgium, one in the Netherlands, and our recently acquired manufacturing site in Denmark. So we're now, as we targeted, a pan-European footprint in fresh juice that's performing for the group. So we're winning because we are diversified by geography, we're diversified by product line, and we have a strong team that's getting results. And I'm really proud to be able to deliver for shareholders.
And that was your business report. I'm Joel Crosskill.